Hello everyone, welcome to our channel. In this video, I am going to explain you about overview of stock exchange. What is the meaning of the stock exchange? What are their functions? And what are the features of stock exchange? Different speculators are in the stock exchange. Everything I am going to explain in clear-cut manner. First, what is the main function of stock exchange? Basically, the stock exchange is a place where securities, shares, bonds, and other financial instruments are listed and bought and sold by traders as well as the brokers. So, in a nutshell, I'm going to tell you that stock exchanges are organized market where this is the place where investors to buy and sell securities freely. This offers perfectly competitive conditions, just like perfect capital market means where large number of sellers and buyers participate in this. Stock exchanges also provide an auction market in which members of exchange participate to ensure continuity of price and liquidity to the investors. Basically, the stock exchanges are organized market where investors buy and sell securities freely. To be able to trade on stock exchange, securities must be listed on it. Right. Now, I would like to go for how it origins, how the stock exchange origin. See, first and foremost, basically, Amsterdam Stock Exchange is considered as the oldest stock exchange in the world. It was established in the year 1602 by Dutch East Indian Company called Van Gogst Intangible Campaign called VOC. Of course, it was subsequently later it was renamed as a Amsterdam Bourse. Right. Next, the first stock exchange in India when it comes to the India. So the first stock exchange on India is a Native Shares and Stock Brokers Association. It was recognized by the government of India in August 31st, 1957 under the SCA, Securities Contract Regulation Act 1956. Later, it became the Bombay Stock Exchange subsequently. Bombay Stock Exchange is founded by Premchand Roychand in 1875. It is the oldest stock exchange in Asia and also 10th oldest in the world. The BSE is the world's sixth largest stock exchange with market cap of more than $5 trillion as far as the May 21st, 2025 is concerned. So this is what you call the origin of stock exchange. What is the meaning? As I mentioned earlier, it is an unorganized market. Purchase and sales of securities will be done. It is a convenient place where trading of securities conducted in a systematic and efficient manner. And it will also conduct as per certain rules, regulations framed by the concerned agencies. It performs various functions and offer useful services to the investors and borrowing companies. It is an organized market for buying and selling corporate securities and other securities. The London Stock Exchange is the most popular stock exchange in the world. Bombay Stock Exchange is the oldest stock exchange in India. See, basically, similar stock exchanges exist and operate in other parts of the world like Tokyo Stock Exchange, Shanghai Stock Exchange, Singapore Stock Exchange, Dubai Stock Exchange, Bangkok Stock Exchange, etc. Right. Having said that, let me move on to the definition of the stock exchange. According to Hastings, stock exchange or securities markets comprises the places where buyers and sellers of stocks and bonds or their representatives undertake transactions involving the sale of securities. As per the Hastings, it is the place where buyers and sellers of stocks and bonds are traded. According to Husband and Dockery, what define the stock exchange is these are the privately organized markets which are used to facilitate trading in securities. Okay, as far as the Indian Securities Contract Regulation Act 1956, It is an association or organized body of individuals, whether incorporated or not, means whether it is registered or not, established for the purpose of assisting, regulating, controlling business and buying and selling of securities. This is what in brief about the definition of stock exchange. Having said that, let me move on to the what are the functions of stock exchange. The first function is a ready and continuous market. Basically, stock exchange, in fact, a market for existing securities. This is comes under the secondary market. When it comes to the primary market, it is the first time company issues shares to the public, that is called primary market, basically initial public offering. Whereas it comes to the stock exchange, it is a secondary market. Means if an investor wants to sell his securities, he can easily and quickly dispose them off in the stock exchange. See, basically this is for existing securities, not first securities. It is already existing securities, stock exchange will be traded in those. Right. The second one is the correct evaluation of the securities. Basically, this is totally online. The prices at which securities bought and sold are recorded and made it public. Thus, transparent in nature. These prices are also called market quotations. One can easily evaluate the worth of one securities on the basis of these quotations. The lender can easily assess the worth of securities offered for loan as well. So, the second function is correct evaluation of the securities. The third one is protection to the investors. All dealings in the stock exchange, well defined rules, regulations, procedures, and policies. For example, brokers can't charge higher rate of commission for their services. If any malpractice is happening, the brokers and concerned persons are severely punished as per the law. So the stock exchange provides reasonable measure of safety and fair dealing in buying and selling of securities. So this is the protection for the investors. The fourth function is proper channelization of the capital. So many people are investing in the shares. Such companies yield good profit. Where see, most of the investors are investing. So the savings of these individuals are directed towards the promising companies which declare where good dividends for a period of time, or where which companies are having more market capitalization, or which companies are issuing right shares and bonus shares. In those companies, people are going to invest. But for that, stock exchanges, these savings are likely to be vested on the shares of the unprofitable unit. So it will be the proper channelization of the capital and aid to capital formation. Many companies, they will approach to the stock exchange for their capital formation. The publicity which the stock exchange gives to various industrial securities and their prices, and the facilities provided by it for the purchase and sale, to encourage the people to save and invest. The stock exchanges, basically, it is a flow of capital into industry and assist industrial development. Having said that, the another function of stock exchange facilitates for the speculation. The positive speculation. Speculation is an integral part of any stock exchange operations. In fact, the fact of the matter is, as a result of speculation, demand and supply securities are equalized. Similarly, price movements are rendered smoothly. And another function is seasoning of securities. Speculators and underwriters hold temporary period security issued by the new companies. They unlock them when the market is prepared and absorb to the new issues. So seasoning for the securities. The another function is clearing house of business information. The listed companies, those companies listed in the stock exchanges are known as the listed companies, are required to provide all important information relating to the capital management and how they are distributed the dividend, and what are the financial statement copies, annual reports, etc. to the stock exchange, so that the clearing house of business information will be very transparent, and they can clear all the settlements as and when there is a need. Having said that, let me move on to the features of the stock exchange. What are the features? So, as I mentioned, it is a market for securities, buying and selling, bought and sold all government bodies, semi-government bodies, corporate bodies. It is a market. It is a place where buying and selling of securities will be traded. And deals in second hand securities already means here one company issues shares to the public, and public is issues shares to the another investor. Company sells to investor, investor sells to another investor. So this is called existing securities. It deals with second hand securities, not first hand securities. First hand securities will be coming under the primary market, whereas stock exchange comes under the secondary market. Right. Next, it regulates trades in the securities. So full stock exchange does not buy or sell securities on its own account. What it provides necessary infrastructure and facilities for the trade in securities to the members as well as the brokers who trade in securities. Ensure free and fair trade. The allow dealings only in listed securities. In fact, stock exchange maintain official list of securities that could be purchased and sold on its floor. See, don't figure out how the official list on stock exchange are called unlisted securities. Then, transactions affected only through members. All the transactions in securities at the stock exchange are affected only through its authorized brokers and members. Outsiders are not allowed into the trading circles of the stock exchanges. Investors have to buy or sell the securities at the stock exchange through the authorized brokers only. Having said that, the stock exchange is an association of persons or body of individuals. It can be registered or may not be registered. Means it can be incorporated or may not be incorporated. That is another feature of this recognition from the central government. All the stock exchange, as it is mentioned, it is an organized market, systematic market. All the rules and regulations are framed all, so it requires the recognition from the central governments. Having said that, let me move on to the, again it is working as per rules, regulations. The stock exchange, the regulating agency is SEBI, Security Exchange Board of India guidelines. If no deviation from the rules and guidelines is allowed in any case. So working as per the rules and regulations given by the SEBI. Specific location. It is a particular marketplace where authorized brokers come together daily on the floor of market. Prices of different securities are traded on the basis of the electronic boards. When there is a working hours completed, it will be closed. Then financial barometers. Stock exchanges are not gambling. These are the financial barometers of an economy. It is a development indicators of national economy of the country. The stock exchanges, how they are functioning, how they are industrial growth, how the stability is reflected. Index of the stock exchange. That is the financial barometers of the economy. Then after having stated all these things, now I am moving on to the benefits and limitations of this stock exchange. What are the benefits? It is an economic development. It is a barometer of the economy, ensure steady flow of savings into productive purposes, not unproductive purposes. It will be going for the economic development. And fundraising platform. Almost all profit-making companies to raise limitless funds by fresh issue of shares from time to time. And it is also tools to divert resources. So any scarce resources are diverted to efficiently run entrepreneurs for better utilization. So what happened here is any scarce resources they can divert efficiently, and they can run their organizations for better utilization. Having said that, let me move on to the capital formation. So increase the capital by fundraising. Fundraiser for the not for corporate and fundraiser for the government as well. Stock exchange service as a platform for rising public debt even. And what about the company? Reputation, goodwill, fame, name, and the society will be improved. Companies whose shares are quoted, whose shares are mentioned in the stock exchange, enjoy greater goodwill and credit standing. Wherever they go, they will get goodwill. Means those shares are traded in the stock exchange. It's a wide market, global market. They can use funds as and when they need for expansion, for diversification, and increases bargaining strength. So it can also companies whose shares rise in the stock exchange, they can go for the higher bargaining power because they have a good reputation in the economy. So what about the benefits to the investors? When it comes to the investors, it's a liquidity. They can convert their shares into the cash quickly, increase the liquidity of his investments, adding collateral value of the securities double. The fact of the matter is the securities dealt on stock exchange makes it good collateral securities for obtaining loan from the banks. If you provide those securities, the banks can easily provide the loans. Investor protection. There is no gambling here. Everything will be safeguarded. The interest and of the investors will be protected. Ensures free and fair trade, dealing strictly enforcing the rules and regulations. Having said that, assessing the real worth of securities through stock exchange, the investor can easily assess market quotations or publish daily in the newspapers and in websites. Mechanism to trade securities. Stock exchange will also mechanism which purchase sale of listed securities in mechanism to trade all the securities, buying and selling will be done. What about the limitations? Lack of uniformity in the control of the stock exchange. There is no proper rules and regulations. Many violations have been done. Absence of restriction on the membership. Allowing more than one charge in the place. No proper regulation of listing securities on the stock exchange. So the margin requirement stock exchange in case of produced exchanges, there is no insistence. So these are the some limitations are there in the stock exchange. Despite having so many some limitations, stock exchanges play major role in every country, not just in India. What about it comes to the India? What about stock exchange in India? Almost there are 24 stock exchanges in the country, with 21 of them being regional in nature. Three others are have set up in the reforms era. National Stock Exchange, over the counter OTCI, EI, and Interconnected Stock Exchange of India Limited have mandate to nationwide trading network. The ISE has been promoted by 15 regional stock exchanges in the country and is based at Mumbai. So when it comes to the NSE, OTCI, ISE, and majority of the regional stock exchanges have adopted a screen-based trading system. So, on the basis of the screen, electronic mode, they can do the trading to provide automated and modern facilities for trading in a transparent, fair, and open manner with access to all the investors across the country. Right. There are some top 10 stock exchanges in the world. Just I will make you to understand the New York Stock Exchange located in the New York City. The capitalization will be different from time to time. So whatever I mentioned in this, it may not be correct, means market capitalization will be different from time to time. So NASDAQ, what do you mean by this? National Association of Securities Dealers Automated Quotation. It is located in the New York City. London Stock Exchange, located in the London. Tokyo, it is Japan, formerly known as the Japan Exchange Group, located in the Tokyo. Shanghai, located in Shanghai. Euronest, it is located throughout the Europe, France, Portugal, Netherlands, and Belgium. So, Hong Kong Stock Exchange, it is located in the Hong Kong. Shenzhen Stock Exchange, located in the Shenzhen in China. TMX Group, Canadian Stock Exchange, located in Toronto in Canada. Bombay Stock Exchange in the Mumbai. Then, coming back to the different types of the speculators, when we are talking about the stock exchange, we should must understand what are the different types of speculators and how it will be dealing with the securities. Speculators are in the stock market are different types. They carry their names depending on their motive of the trading in the stock exchange. They are named after the animals. Whenever we see the stock exchange, there will be bull, bear, lame duck, stag are appearing before the stock exchange places. So they are named after the animals as their behavior could be compared to best with the behavior of the animals. So one by one. First is a bull. As the figure mentions, it is a bull or teziwala is an operator who expects rise in prices of securities in the future. The bull speculator always expects that the prices of securities will rise in the future. In anticipation of that, what he will do, he will make purchase of shares at present. Once it increases, he will sell it off the with higher prices in the future. He is a called bull because just like bull tends to throw his victim up in the air. The bull speculator stimulates the price to rise. So he's an optimistic speculator. Having said that, what about bear? So bear is a Monday speculator expect prices to fall in the future and sell securities present with a view to purchase them at lower prices in the future. So what bear? It is the opposite of the bull. Means bear is expecting that the prices of the securities will fall in future, so that what is going to sell it off the securities, and when they are at present with a view to purchase them at the lower prices in the future. A bear does not have securities at present, but sells them at higher price in anticipation of that he will supply them by purchasing at lower prices in the future. He may do like that. Then what about stag? Stag is a cautious speculator. Basically, it is an intraday trader. He applies for shares in the new companies and expect to sell them at a premium if he gets an allotment. He selects those companies whose shares are more in demand or likely to carry a premium. So what exactly will do that? He is a cautious speculator. See what he will do that whenever the prices are reducing, he will purchase and sell it off at higher price. So he always selects those companies whose shares are in more demand and likely to carry a premium. First, he will basically at the time of purchasing, he is purchasing and sell it them at the premium. So that he will get the profit out of it. And lame duck is a struggling person. So when bear finds it difficult, what I told you that difficult to fulfill his commitment, a bear speculator contracts to sell securities later date. But when it comes to the latter date, no buyer is in a position to purchase your shares. So on that time, he is not able to get the securities as the holders are not willing to part with them. So what I told, bear may not have present securities, but with a intention to purchase in later. So he is selling the goods or securities here. So moreover, the buyer is not willing to carry over the transaction. So that is why he's a struggling like a lame duck. When he wants to, the buyer is not willing to carry over the transactions. He is struggling to sell those securities as a lame duck. So this is the one of the another speculators. Right now, I am moving on to the recent developments in the stock exchange. Basically, the national stock market system, as advocated by the how high powered group of establishment of a new stock exchange is headed by Sri M.G. Pervani, popularly known as the Pervani Committee. As per the committee, at present, national stock market in India comprise the following. So, National Stock Exchange of India Limited, Stock Holding Corporation of India Limited, National Securities Depositories of Limited, National Clearing and Depository System, Security Trading Corporation of India. One by one, going to have, a brief discussion about all those. The NSE was incorporated in 1992. It's country-wide screen-based online and order-driven trading system. It uses satellite link to the spread trading throughout the country, thereby connecting members scattered all over India. Through computer network, members orders for buying and selling within the prescribed price or matched by the central computer with each other and instantly communicate to the trading member. It is a has two segments, debt segment and capital segment. When it comes to SHCIL, the Stock Holding Corporation of India Limited is committed to speed up the main objective of this Stock Holding Corporation of India Limited is to speed up trading, clearance and settlement services for the securities and monetary instruments. It came into the being in 1986. This is the first depository participant list with the SEBI and acts as an agent of National Securities Depository. The third one is a National Clearance and Depository System. Any problems, any restrictions, any hindrances have happened in the clearance system, this company means this system was created chiefly to help overcome the problems of settlement and clearance transactions, if any workload on the clearing agencies and shared transfer agencies. The problems mainly how it will be arose out of systematic risks like counterparty risk, credit risk, bad deliveries, long delayed delivery, counterfeit scripts, and forged scripts. So, this national clearance and depository system will provide solutions for the problems. as far as the settlement and clearance of the transactions. The fourth one, Securities Trading Corporation of India. The Reserve Bank of India set up Securities Trading Corporation in May 1994 under the Provisions of Companies Act, and it is authorized and paid up capital is almost 500 crores. RBI contributed 51%, almost 50.18, and 19 diverted parts of the equity in ST in favor of the Bank of India in existing shareholdings. Right. And the last one, NSDL, National Securities Depository Limited. It is the government of India enacted this Depositories Act in 1996 with the way for setting up of depositories in India. It is a pioneering concept of depositories and paperless settlement of securities. It is inaugurated as a first deposit in India, November 8, 1996. Then, moving on to the main important concept is the difference between stock exchange and commodity exchange. Basically, stock exchange is important concept of capital market, where it is a commodity exchange, it is a commodity market. Here, securities will be traded, where commodity exchange, commodities will be traded like metals, gold, silver, copper, energy, agriculture, livestock, and meat. And when it comes to the function, it's providing easy marketability, whereas commodity exchange offering hedging means reduce the risk or price insurance services and liquidity to the securities. The main objective of stock exchange is facilitating capital formation. Where it comes to the commodity exchange, facilitates goods flow through risk reductions. So hedging is a the minimize the risk. That is a technique for minimizing the risk. When it comes to the participant in the stock exchange, investors and speculators, whereas commodity producers, dealers, traders, and body of speculators. Period of dealings, it's a cash, ready delivery, and dealings for account for fortnight. When it comes to the commodity exchange, instant cash dealings and settlement for period of 2 or 3 months for future market dealings. Basically, commodity exchange will be followed in the forwards and futures. Articles traded, it is a industrial securities, whereas commodity, durable, graded, and goods having large volume of trade. And speculators, saleable to speculate ready, liquid and continuous market of securities will be where in comes to the commodity exchange, speculation ensures assumption and absorption of price risk. Here, forward contract may not be available in the stock exchange. The forward dealings are simplified as securities are fully standardized, whereas standards are to be fixed for deliverable grades to facilitate future contract. See, basically in the stock exchange, forwards and futures will also available, but these are the standardized. When it comes to the commodity, standards are to be fixed for the deliverable grades to facilitate future contract. These are the different uh, uh, mm, differences are there as far as the stock exchange and commodity exchange is concerned. And there are some few words I will make you to understand that remedies. He acts as an agent of the member of the stock exchange, obtains business for his principal, that is the member, and gets commission for that service. Authorized clerks are mere employees of the members, appointed by the member of the stock exchange. Brokers are commission agents who act as intermediaries between buyers and sellers of the securities. They don't purchase, sell securities on their behalf. They bring together the buyers and sellers and help them in making a deal. Jobbers are securities merchants dealing in shares, debentures, and independent operators. What they will do, they buy and sell securities on their own and on behalf of and try to earn through price changes. And speculation, it is a trading financial instrument involving high risk. It is an expectation for significant returns. When it comes to the gambling, there is no reasoning involved in the gambling. It acceptance, action fluctuations in the price, and it is unethical and illegal. It doesn't perform in the economic function. What about Nifty, national, national and stock exchange for 50 companies? It is what they will do. Nifty basically means the index of the NSE of the 50 most actively traded stocks from across all sectors. How they will take it represents the top stocks of the NSE, and when we talk about Nifty going up, it means that all heavyweight stocks of NSE across all sectors are moving up. Most of the stock trading in the country is done through NSE and BSE. There are other stock exchanges as well, like Kolkata Stock Exchange, but they are not that popular like NSE and BSE. The so Nifty consists of top 50 companies from 24 different sectors: textile, oil, communications, everything. Nifty is computed from the performance of top stocks from different sectors. Some mutual funds use Nifty as a benchmark. The performance of the mutual funds is assessed against the performance of the Nifty. On NSE, futures and options are available for trading with Nifty as an underlying index. Nifty is calculated by using the market capitalization on weighted average method, according to which weights are assigned to the particular sector and the particular security. So, in nutshell, Nifty is meant for National Stock Exchange for 50 companies. Nifty is the index of NSE, National Stock Exchange. Then come to the Sensex. It is the index of Bombay Stock Exchange. The Sensex has a list of 30 stocks. Nifty 50, Sensex is 30. How it decides the stocks that are to be listed in the stock exchange. Since the criteria for picking up the stock listed on the Sensex is volume of the trade, that stock, and total volume of stock in BSE. Based on the factors, BSE regularly prepares set of 30 stocks which will be together called Sensex. Means sensitive index. Each stock is allotted weightage according to the criteria, and the criteria also keeps on changing with time. So now the stocks are normally traded in the BSE each day, and price of the stock is dealt with the concerned sector. And the stock trading timing, it is between 9:15 a.m. to 3:30 p.m. Monday to Friday. So there are two major stock exchanges, in Bombay and National Stock Exchange. However, the timing of the is the same. First of all, you need to know that stock market in India is closed on weekends, Saturday and Sunday. It is also closed on the national holidays. Basically, the timing will be 9:15 to 3:30 p.m. The future market, it is what will be happening is it is not the present market. Future market is an auction market in which participant buy and sell commodity and future for delivery on specified time in specified date in the future. Examples of future markets are New York Mercantile Exchange, Kansas City Board of Trade, Chicago Mercantile Exchange, Chicago Board of Options Exchange, the Minneapolis Grain Exchange. Originally, trading was carried out through open yelling and hand signals in the trading pit. Options, similar to the future, but options is a type of security that can be bought and sold at specific price within the specified period of time in exchange for non-refundable upfront deposit. An options contract offers buyer the right to buy, not the obligation to buy at the specified price in the future. When it comes to the Dalal Street, it is in Mumbai. It is the house of Bombay Stock Exchange. Lombard Streets, it is in the London Stock Exchange, city of London's merchant, banking and insurance industries stretching back to the medieval times. Then comes to the Wall Street, it is in the New York Stock Exchange. Wall Street is a lower Manhattan, that the headquarters, the largest US brokerage and investment banks. These are the different overview of the stock exchanges. Thank you, one and all. Thank you for staying with me. Thank you for watching. Thank you for your support and encouragement. Thank you, one and all.